Hi guys, how are you? Welcome back to Real Macroeconomics and Investing. Patreon.com/Real Macro. Come down, like, subscribe, follow along, and we're going to talk about a lot of things, right? We're going to talk about money creation, the monetary system, macroeconomics, trading, investing, technical analysis, you name it. We're going to talk about everything. All right, so in the previous two videos, I talked about this gimmicky $1 trillion magical coin. This video, we're going to talk about cryptos. We're going to talk about Bitcoin specifically, okay? And we're going to talk a little bit about gold. And we're going to talk about money, right? These things are money. People are going to argue. They're going to tell me, no, it's not. It's not money. Bitcoin is not money. It's like, well, guess what? It functions exactly like money, and I'm going to show you how and why. Okay? Um, so don't confuse the magical, gimmicky uh, $1 trillion coin with Bitcoin. It's not the same thing. The difference is that nobody has funded the $1 trillion coin. The government just minted it up, gave it to the Federal Reserve, and that's it. $1 trillion is wiped off. Really? Is that the way it works? No, not the way it works. It's a loophole. It's gimmicky. It doesn't work. Okay. If that were to happen, then guess what? You're going to bypass Congress. The executive branch will be able to just print up or mint up these $1 trillion coins. They're going to go out. They're going to go on a spending spree. The bond market is going to collapse because everybody's going to be like, "What the hell are you doing?" You know what I mean? We don't want these gimmicky little things. You remove the auto stabilizer when the bond market is removed, because what happens is in a recession, bond prices rise, interest rates fall. That makes money cheaper. People go out, borrow, and spend. That recovers the economy. And then when the economy starts to overheat, as we saw recently, what happens is that bond prices start to collapse, interest rates rise, making money more expensive to borrow. So that creates less money, and it cools off inflation. Okay, and it tries to keep that stability. So the government gets involved. But anyway, we'll talk about that later. All right. So that's a huge shock to the system. The currency would eventually hyperinflate and collapse if that gimmicky little coin $1 trillion coin were ever used. Now, let's go back and let's talk a little bit more about fiat. Let's refresh ourselves a little bit. And the nice feature about fiat is that all money is created, it's funded by the private sector credit worthiness. Okay? So, what does that mean? Your blood, sweat, tears, savings, investment, wealth is what brings dollars, euros, pounds, whatever. It brings that currency into existence. Okay? I'm going to explain that a little bit better. Okay. So, loans create deposits. Okay. But to make a loan, okay, to make a loan, you need a credit worthy borrower willing to take a loan. That comes first. A lot of people are going to tell you that doesn't come first. They're not even aware of it. They'll tell you that money is created out of thin air. They'll tell you that the government spends it, the central bank creates it and just passes it out like candy. Nonsense. All of it. If you find a way where you can get dollars without being credit worthy, let me know. I want to go get some of those dollars. You're going to see that it's not possible. Okay? So, you need a credit worthy borrower. Okay? And you need that credit worthy borrower to want to take a loan. And then that loan, if approved by the bank, the private bank, no government, no Fed, forget about these entities, right? Private bank will create a deposit once it's approved and you sign on the dotted line, right? Now, once you spend that deposit, it becomes income, profit, savings to somebody else in the private sector. That is money creation. Okay? What if you use a credit card? Well, You use a credit card, the bank is going to approve you. They're going to set the interest rate. You're going to sign on the dotted line, whatever. Get that credit card, all right? You have $5,000 limit. What the bank is telling you is whenever you want, you can go out, buy something with that credit card, and guess what? You created money. Okay? You, not the Fed, not government, you know, not the bank, right? The bank made it possible because you made it possible. You are the one who is credit worthy. You are the one that's funding that loan, that credit. Okay? It doesn't come to you out of magic just because you look pretty, right? You got to have a job. You got to have some assets. You got to have maybe your future labor, some wealth, right? Maybe buy a car. Well, that car is collateral, right? A house. Well, that house is collateral plus your future income, right? So you gotta be creditworthy, and that's the way money comes into existence. Okay, you, the creditworthy borrower, fund the loans, and by you funding them, then the bank can create a deposit. When you spend it, it is income, profit, savings to somebody else. And then, and only then, can the government, okay, tax and borrow, okay, the money, right? By law. Constitution, go read it. Then the government can tax it. If that's not sufficient, then the government is going to borrow those savings. And then by borrowing those savings plus interest, it is also creating money. Okay? Now, you are the one that's funding fiat currency. Then the nice thing about fiat currency is when the private sector has a lot of wealth and it needs more cash, then it can expand. Okay? When that doesn't happen, sometimes it happens, but at the same time, if you pay back those loans, guess what? The money supply decreases, credit decreases, right? So there's at least in theory, because credit is always expanding because the population is expanding, right? Wealth is expanding. So anyway, um, the fiat currency is nice because it can adjust to whatever is the private sector requires. Okay, that's the nice thing. When you start getting the government involved, it gets a little fuzzy. Okay, if they get too borrow happy, then you end up somewhere where you don't want to be. Okay, and that's why fiat currencies typically end up collapsing. Now they're going to tell you that it's 10 million other reasons why currencies hyperinflate. People would tell you, well, it's foreign debt. No. It's never in foreign debt. It's always in local currency. Okay? Because when that debt was made, when that loan was made in a foreign currency, the local currency could easily sustain it. Otherwise, why would you take on that loan, right? Um, the second thing to kind of think about is, and we'll talk more about this in the future, is why would you want to borrow in another currency? Okay, something is up there. Government is doing some funny things. There's not a lot of trust in that currency, and we'll talk about that again in future videos, right? But it's always in a local currency that a fiat currency collapses. It's not due to foreign debt. It's not due to any other reason. Good. All right. Now, we're clear that fiat currencies are funded by a credit-worthy borrower in the private sector. Good. Guess what? Bitcoin, Bitcoin here is also funded by the private sector. Today, you need $94,000 if you want to own one Bitcoin. And you need about 26 $100 if you want to own an ounce of gold. Okay? So who's funding it? You are. You are the one with the blood, sweat, and tear who is credit worthy enough to go out and acquire dollars um, for your blood, sweat, and tears savings, investment, and wealth. All right. So you are the one funding a crypto. That means, okay, that the crypto, the gold coin, are money. Are they legal tender? No. But that doesn't mean they're not money. I can take a gold coin to Japan and exchange it or whatever the exchange rate is in Japan, uh, Greece, in Europe, Russia, Africa, it doesn't matter. Same thing with a Bitcoin. I can exchange it. It's a better network in crypto. I can exchange it on the fly anywhere, any currency, anytime. Okay? So that is also a currency, but these currencies are funded by the private sector just like a fiat. This magical little gimmicky thing here, the $1 trillion coin, is not funded by anything, so it's crap. Okay? So you shouldn't really pay attention to it unless somebody comes up Trump with some stupid fucking idea to use such a gimmicky little thing, and I wouldn't put it past him. Then start worrying about it. Okay? So remember this. If somebody tells you that the government issues money, if they tell you that the Fed just prints up money and passes it out like candy, or a bank just creates money out of thin air, if they tell you anything like that, remember this. No government, no central bank or private bank can ever self-fund. They can't. It's illegal. It's counterfeiting. Okay? So, if anybody tells you that, ask them, great, can you show me where a government, a central bank, or a private bank can self-fund? And if they can't, which they won't be able to because it's not the way it works, then that's the end of the discussion. They're wrong. Okay? Now, let me tell you, let me walk you through how the euro was created. If a brick coin was ever created, how it's going to be funded? The same way, the same exact way. So let's use the euro. Okay, you woke up one morning. Let's say you had drachmas. Go to the bank. You give 465, whatever, 35 drachmas. You receive €1. You go to Germany. You have a Deutschmark or France or whatever, lira in Italy. Doesn't matter. Whatever the exchange rate was set at that morning, you went to the bank and you gave that amount and you received €1 for whatever that exchange rate was. If your money was already in a bank account, it was already converted. Okay? So you see, you were credit worthy. On that day, you were credit worthy. You either had savings already in another currency, okay, that was converted automatically to euros, or you had some pocket change or some money under the mattress or whatever. You went in, you exchanged that money for a euro. You were funding the euro with your blood, sweat, tears, investment, and wealth. Okay? That's the way it is. If a brick coin were to be created tomorrow, it would be the same exact thing. Whatever currency it is that you're using, whatever country it is, whatever the exchange rate is set at, you go to the bank, you give that amount, you're going to receive one brick coin, whatever they're going to call it. And if your money's already in the bank, it's already converted into brick coins because that's what you opted to do, then that's what's going to happen. But you are the one that's funding it. People are going to tell you that, well, coin is just a medium unit of exchange. Yes, it's a medium unit of exchange of your blood, sweat, tears, savings, investment, and wealth. That's what you are exchanging. You're just expressing it through a currency. Okay? When the government gets involved, when there's too much money that is being approved at a not so favorable, uh, you know, uh, risk-free, not risk-free, but no risk, kind of like, hey, everybody, take money, whatever you want. Can you breathe? You have a pulse? Yep, you're credit worthy. Here you go, right? You start doing something like that, um, you're going to start to increase the supply of money, like Turkey, okay? And then what's going to end up happening is your blood, sweat, and tears are going to be nominally worth more, but inflation adjusted, it's going to be the currency is going to be worth less, 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 less. Okay, and that's a problem if you're a saver trying to save for retirement. You go into your retirement, and guess what? You busted your ass to get 100 liras, and now 100 liras won't buy you even a piece of candy when it used to buy you a home. Well, you got big fucking problems, right? So, um, the key takeaways here is that all money is funded by you, the private sector, your blood, sweat, tears, savings, investment, and wealth. And if you want a Bitcoin today, and it's $94,000. If you want gold, if you want a brick, if you want a euro, if you want a yen, or whatever, it's all convertible, whatever currency you want. And then you can use that money to go and use it to buy whatever you want. You can use a credit card. You are printing. You are the one that's creating money out of thin air because you were pre-approved by the bank for $5,000 because you are credit worthy, right? So very important stuff. I hope this clears up a lot of confusion for you as far as gold and Bitcoin goes. And I'll talk to you again on the next video. We're going to talk about some of the other things. We're going to talk about interest rates, why they work sometimes, why they don't work other times, and a bunch of other things. All right, guys, take care. Like, subscribe, follow, come down. I'm going to talk about a lot of things. Take care. Bye-bye.